Welcome out to the halftime report presented by Tackle Trading for December 8th, 2021. We got an amazing show planned here for you guys here today as we got Coach Tyler and Coach Mark to help us navigate the financial world. And Omicron, who remembers Omicron? Anybody? Anybody? The market certainly doesn't. As we have recovered the price action after the drop, I got Coach Tyler to break things down technically. I got Coach Mark to help us understand the news of the day. Tyler, pleasantries, how are you today, my friend?
Hey, doing good. Market's back to almost all-time highs. So much for that sell-off. We're back.
So much for the
sell-off. I'm
sell-off.
excited.
The buy the dip mentality still alive and still very strong in the marketplace. And the number one buy the dip, I got to call it out. The 50-day moving average proved itself out yet again. Coach Mark, how you doing today?
I'm doing good. Omicron's transmissibility might be high, but so is mine. I'm an infectious personality. What can I say?
Was that a positive thing? I think that was a positive thing.
Played.
I think you're making a point. Definitely, you are infectious. There's no doubt about that. I'll let the subjective nature of that take over now. But let's get right into the markets here, guys. We got a lot to break down. Tyler, the first thing that I always have you do on Wednesday is to give us your technical read in the marketplace. I kind of break down the major markets and the sectors on Monday, do a little recap on Tuesday. But I always like to get your read on Wednesday because it kind of helps me personally solidify my read. Give us a complete breakdown on multiple time frames here, Tyler, in the S&P 500.
Well, in case it wasn't obvious, yesterday was a game changer. I just want to point out here, Matt, look, rally, nope, not yet. Knock it off. Rally, nope, not yet. Go back down. Gap up overnight, nope, not yet. Go back down. Now, no, go back down. Then right here, changing character. Look at how simple it made it, right?
Yeah.
Up, down, up, down, up, down, up, down, up, up. Look, you don't have to be a genius. This is the first time you've had 2 up days since this whole drama began. And it's not as if this was 2 dojis. It's not as if this was 2 narrow-bodied candles. You're talking like a really, really large rally yesterday. I'm sure you guys talked about this yesterday, but that was the tell. Fear, panic got smashed. Premiums got crushed yesterday. I don't know what else to tell you if you don't change your bias after yesterday. It doesn't mean we won't have down days. It does, I believe, mean volatility in terms of excessive volatility has gone by the wayside. At the risk of being overly optimistic and getting too far out over my skis here, I think Santa Claus is coming.
Well, the Santa Claus is coming, and there's a couple different Santa Claus rallies. Obviously, you have the one that happens after Christmas, that week between Christmas and New Year's, but you also have, the general Santa Claus seasonality, right, is what you have. And, if Santa Claus is going to come to town here, Tyler, and give the traders a lot of wonderful gifts here, I kind of feel like it starts with the breakout. The recovery is fantastic, and the recovery helps the investors. It helps the position traders, absolutely. But for those short-term traders, I think we're again, the recovery's been great, but we're looking at that next breakout here, in my opinion. Where is that breakout channel in the S&P? Because I certainly do agree with you that yesterday was a telltale sign in the marketplace. The pattern in the market, up, down, up, down, up, down, up, down, could not find its foundation, could not find a footing from a technical perspective. Yesterday, you saw that breakout from an intraday. You saw the consistency happen from an intraday perspective. It was on the backs of some very positive news surrounding Omicron, where basically it's, the news is very simple. The vaccines offer protection. The over-the-counter drugs offer some degree of protection. And like Coach Mark says, the transmission rate is quite significantly higher, but the actual impact is less. These are all positive developments, and the market has certainly responded in that vein. But now we're staring at a breakout channel, and it's not surprising to me, Tyler, that after 2 consecutive days of rapid price appreciation, that the market gets stuck right at resistance. That's not surprising to me at all. And so, and I don't think it's surprising to most technicians after a 2-day rally to get kind of stuck at the all-time high here. Where's that breakout channel for you? Because again, the bias is shifting, but it's one thing to hold support. And we say this at Tackle all the time. It's one thing to hold support. It's an entirely different thing to break out of resistance. Where's that resistance channel for you?
Two things to say on this. The number is 4720. I think, and
Ish,
I say
yeah.
that I
Ish,
say that as
yeah.
if. Say again.
No, I just said ish, right? Because
Well,
it's,
that's what I was going to add. I say that as if it's not 4721 or 4719. It's 4720. Dang it. No, look, that's the zone, right? That's the zone, and that is effectively today's high. So not there yet. But here's the other thing that I find utterly fascinating and confirmation of bulls maybe dancing on the graves of bears a little bit yesterday. I feel like the best way for them to spike the football and say it's over is for the market to do nothing today. It's almost as if yesterday you had FOMO, you had a short squeeze, everybody jumped back in. And then today, like no volatility. You could ask for nothing better, quite frankly, because we have been seeing 1%, 2% daily moves back and forth and back and forth. And today it's like, holy crap, this is the exact opposite of what we've been seeing. What more evidence do you want that conditions have changed here?
Well, honestly, Ty, yesterday I said that yesterday. I said, guys, it's very important at this point to see the market play some defense at the higher prices here. It will justify a lot of those decisions that traders have been making in the last couple days to buy that dip, to really kind of participate in this market rally. And the defensive nature of the market solidifies that opinion, in my opinion, in to a certain degree. And that's exactly what you're talking about. And quite frankly, Tyler, I would love nothing more than another couple days of consolidation as those short-term moving averages catch up to the rapid price appreciation over the last couple days, and then you line up that breakout very, very well. You got to like the breakout here from a multiple time frame perspective. The intraday analysis is building into a breakout. The daily charts are back up against the all-time high, and then on the weekly chart here, Tyler, if you'll go out a little bit more time frame. On the weekly chart, you got to be looking at that as a potential breakout as well after a flag-based pattern kissed off the previous area of resistance, and now you're lining up that breakout as well. I like this breakout on multiple time frames. Again, I think we got to see the breakout. I would love the market to play a couple days of defense. You're not going to get what you asked for, but that's what I am asking for is a couple days of defense. Showing again, I think it's important. And again, we're talking about the same thing. Showing the ability to withstand the punch that the market has been throwing the last couple weeks, and then to shake off this volatility. Because I said yesterday, Ty, I said the volatility really hasn't shifted yet. Yeah, the market's going up and the VIX is coming down, but the speed of movement is still very rapid right now. And having the market come in after the rapid volatility cycle we've went through in the last couple weeks, having the market come in and be like, yeah, we're going to doji up here against the high on a Wednesday. I think it shows a little bit of confidence in the marketplace. That's the defensive nature. Now let's see if it can hold the intraday support levels to really solidify that high base analysis. So we'll see that pattern throughout the next couple of days. But right now, a little bit of consolidation at the top end of the range. Tyler, are you seeing anything different in the other indexes such as the NASDAQ, the Dow Jones, and give me a quick picture at the Russell 2000.
Yeah, as far as the NASDAQ goes, it's a little bit messier. So I will tell you that the S&P has the cleanest look, which, spoiler alert, we're going to do something on the S&P later today in the Jedi Options segment. So stay tuned for that. From a look, Matt, actually, look, if you took out this little pivot on the NASDAQ,
it's very clean.
It's actually really clean.
Yeah.
And remember, the fact that it went up here was a sign of relative strength at the time because the S&P wasn't able to follow tech. So I don't know that I'm going to penalize the NASDAQ for being a little bit messier. Maybe you just don't worry about this little overshoot and say, hey, this pivot, this cluster of candles, today's high, call it 16,440-ish. that zone lines up pretty good with the S&P. So presumably you take that out, S&P is at an all-time high, NASDAQ's still got another resistance there. But Matt, even if we just went up and tested, it's a 340 point move. So that's good enough for like T1 if you want to play the breakout. So yeah, I would say today's high is lining up nicely with major resistance.
You know, when you're looking at that wick analysis above a breakout channel, the question I always have is it going to play a role here, right? And if the S&P breaks out on positive news following the volatility shift that we've seen in the last couple weeks, I just don't feel like that wick's going to play that big of a role. I just feel like it would just be like it would be stomping ground type area. If you're breaking out here in the S&P on multiple time frames, I'm not necessarily going to care about a wick on the NASDAQ that has context around it. Does that make sense?
Yeah, and tech has been the leading sector anyways, and so S&P is not going to break and rip without participation from the NASDAQ.
Well, and the NASDAQ was a big leader yesterday as well. Yep. Coming back into the recovery. And so I don't think that wick's going to play a little bit of that big of a role. I like that breakout channel, kind of where your line is in that 16,450 level, 16,500 level. I think that's the breakout channel in the NASDAQ we're tracking. Again, it's not that the wick up there about 16,750 doesn't play a role. It's just not playing a role in the big picture of things right now when you're tracking the marketplace over the last couple of weeks and you're dealing with the type of volatility that has been in the marketplace. In the Dow Jones kind of got beat up a little bit worse than the NASDAQ, a little bit worse than the S&P, coming all the way down to the 200-day moving average. Now you're in this recovery here on the Dow Jones where seemingly everything is being picked up. Do you have a different read on the Dow Jones here technically than you do on the NASDAQ and the S&P? Because Tyler, I see the S&P and the NASDAQ a little bit clean against the breakouts, whereas here in the Dow Jones, it's difficult for me to find that breakout channel.
I would agree, and this is not specific to what's going on right now in the NASDAQ or in the Dow. If you look at the entire year,
yeah,
particularly the last 6 months, the Dow has been weaker and the Dow has been messier than the other two indexes. So it really hasn't paid for you to over analyze the Dow and over trade the Dow when you have these better alternatives.
Yeah,
I'm with
my
you.
take too.
Yeah, I'm with you here. We can slice and dice this if you want, but
we don't need to.
It's not as clean.
Yeah. And then the Russell 2000, Tyler, you and I we were tracking that pullback seemingly every day as the market was trying to fight for support. The volatility hit with Omicron, broke that support level. What's your read now as the market is starting to firm itself up a little bit more post-Omicron, now that we kind of have an understanding of exactly what that variant is and how it's going to impact both in terms of the health perspective, but also in terms of the market perspective and an economic take as well. What's your read here on the Russell 2000 now that that's kind of being put into the rearview mirror and we can get back to technical analysis on the Russell?
Well, it does make you wonder if we're just going to go back to what this had been doing previous to the breakout. Remember, the S&P and the NASDAQ have not needed the Russell to keep going up.
Not at all.
The Russell's been dead most of the year. Market keeps going higher, higher, higher. And then just when it starts to play ball, it goes back down. I don't have a strong read here, Matt, because there is not a strong read. I'm encouraged by the bounce. I like that it's exhibiting relative strength today. It's got room to play catch up if it wants to get back to where it was. Remember, these are economically sensitive. These are more risky assets, and you know,
a little bit higher valuation.
Yeah, higher multiples and everything. So I don't know. I'm taking this a day at a time. I would love it to get back over 2,300, get back over the 50 MA, look more like the S&P. It's just going to take some time because there's a lot of resistance.
Is that the number you're looking at this point? Because that's kind of where I'm looking at here as well. It's flat out neutral, but I think you're prepared above 2,300 to shift your bias into a little bit more aggressive bullish perspective. But until that occurs, you're just underneath too much chop here.
It's not a clean play. It's just not. I will say that given what happened this week, I would much rather look to buy strength than try to guess that the Russell's going to roll over again and play that game of going bearish. I think that's a harder trade.
I agree 100%. Tracking the S&P breakout, tracking the NASDAQ breakout. The Dow Jones got to clean itself up a little bit, and the Russell 2000 has a little bit of work to put in before it gets a little bit more clean. Let's move on to a little bit of commodity conversation here, and let's take a quick peek at crude oil. I want to bring in Coach Mark. Coach Mark, oil's coming back in the recovery the same way the market is, but technically you got a fairly challenging environment as you're still navigating a bearish downtrend. And even with this nice aggressive upward movement in price that crude oil is having, because of the velocity of the downward movements in price, you're still in a bearish downtrend. And quite frankly, I think that bearish downtrend technical analysis is consistent until $75 is broken out of. That's where you really saw that initial breakdown. What is your read though? Because I'd like to get your perspective. I'm relying a lot on technical analysis here, as I always do when it comes to volatility shifts. What's your read here in the crude oil market?
I think OPEC put a floor in. They did something very clever last week.
Yeah.
They said, we're raising production, but we're going to keep our meeting open, that we can adjust that if we have downward movement in prices. I thought it was a very clever trick. Because it basically told shorts, listen, there's a bottom here. You keep going down, we're going to cut production. That's essentially the message they said. And so I think there's a floor. And so like that support level in the mid 60s, I think that essentially OPEC in their cleverness, basically said, you try to short it here. I double dog dare you. I double dog dare you. Now, so I think there's a floor there, but upward mobility now, well, now we're running into, and with Omicron,
yes,
the other bullish factor obviously is Omicron, right? The data on Omicron has been overwhelmingly positive. Very transmissible. There have not been any serious cases.
Chucky, I gotta give you credit here, because you came on the halftime report literally a week ago Monday, right when the news was coming out and the volatility was hitting the market and everybody was panicking and everybody was freaking out. And you came on, you said, this is the data. It has a higher transmission, but as of right now, it has less severe illness, less hospitalizations. We need to give it a little bit of time. But even when the Moderna CEO came out and said what he said about the vaccine, you said he might want to take a little bit of time on that one, because we need to give this a little bit more time. You were preaching caution, you were preaching patience, and I know our community was served because of it. So I just wanted to give you a little bit of shout out. Thought you were very good on Omicron in a market that wanted to be a little volatile and wanted to overanalyze everything. And I felt like you were a major voice of reason, and it certainly helped me navigate the market over the last week and a half. So I do appreciate it. Just wanted to give you a little bit of shout out. Thought you were awesome last week and a half.
No, and the data on Omicron, just to give you a quick up, I mean, it's basically what we've known for about a week and a half now, as far as, the data hasn't really changed. Very transmissible. Wouldn't be surprised if we see Omicron become the dominant strain. But the severity of it is Fauci's even came out and said that he's like, there's no way this is worse than
well, and biotech and Pfizer came out today and said they 2 doses offers protection, 3 doses offer immunization. So I mean, the news coming out of the vaccines is very, very positive. The news coming out on Omicron has been very positive for the marketplace. What about in terms of crude oil here, Chucky? At what point, I agree with you that there's most likely a floor around the 62.5, 65 area. I certainly agree with that. But from a technical perspective, I still see this as a bearish downtrend. My eyes can't deceive me here.
And so, we had a breakout of little short-term, the resistance peak to start the week, and we're started upward mobility. And now becomes the problem on reversals, because you can have a bullish take now, but now you use, so I'm bullish. I'm bullish on reopening. I'm bullish on cyclicals. I'm bullish on oil, but now this is where you use your knowledge of technical analysis. And we say this all the time. If you give up V-shaped recoveries, because right now, ARC, V-shaping, underbelly, V-shaping, oil, V-shaping, and maybe it goes to the top again, and if you have some existing exposure, you'll make money on that because most of us maintain existing exposure in our portfolios through investments of some kind or another, right? But, we're talking about new layers of addition. If it just skyrockets to the top, you have to make that philosophical call. Am I going to miss it or not? I'm going to miss it because our knowledge of technical analysis comes into play. And technical analysis isn't perfect, but dang, it sure does treat you well. It really is what separates gamblers from successful long-term traders. And so when you have these sharp recoveries, can it V-shape? Sure, we know it can. We've seen that happen. The more likely path is you come into falling moving averages, you hesitate, maybe you come back down, form a short-term support level, and then eventually you hope to get a nice solid technical signal. So do I feel comfortable selling naked puts down near support level from like position trading? Sure, right? I think there's a floor,
but not comfortable enough to have a directional bias yet.
I think you have to.
I understand that.
Yeah, I think you have to respect. You have a way of approaching trading, or you don't. And for me, and I know for you as well, like when you have these sharp recoveries, before you get too aggressive, you got to have. It's going to take some time to develop a really good pattern.
And can I be consistent technically very quickly, Chucky? I get that a lot of people out there are talking V-shaped recovery here over the last couple days. Let's not allow the market to miscategorize things. This is a bearish retracement in crude oil, and it's a bearish retracement in ARC. That's what it is at this point. You have a series of lower lows, lower highs, and you basically have not violated resistance yet. That's not V-shape. That's a bearish retracement, is what it is.
And that's the thing. And there are so many charts. I like the underbelly. I like oil. There's lots of areas. You got a lot of this pattern out there right now, right? Hey, it's all good. There's never
Chucky,
anything.
Specifically, I'm talking crude oil and ARC. I don't have a bearish retracement analysis in the S&P. I have a complete recovery and talk and breakout. Like, yeah. I'm just talking pull a bark for a second. When you see the $90 to $102 movement over the last 3 trading days, and you see that V-shaped start to take hold, I get it. But we haven't even broken out of the previous resistance level that was violated at support when the volatility began. And so until that occurs, and again, I just want to remind everybody, until bear stop out day occurs, there's no V-shaped recovery. It's a bearish retracement until bear stop out day.
No, and it's one of the things you learn from technical analysis over the years is that I guarantee there are bearish traders out there looking to reload if they get the right
especially
pattern.
in ARC.
Especially in ARC. There are bearish traders looking to reload. Give me some slowing momentum at top. Give me some short-term support levels breaking, and boom. And so it's like putting your money to work. You always want as many factors working for you as possible. And going back, I got fundamental, right? I got positive Omicron news. I got
you got a backdrop of fundamental.
I got a backdrop of OPEC doing their thing. Now just give me some good solid technicals. And once again, I feel comfortable with like naked puts on companies down below just because I do think there is that. But once again, that's dabbling. As far as getting really aggressive, I got the fundamental aspects I like. Now give me the technicals, and the technicals can take some time.
I agree with that. Let's move on. Let's talk a little bit about gold here as we navigate the markets here on Hump Day in the market this Wednesday on December 8th. Tyler, I've been calling gold a nothing burger until we see a little bit more time, a little bit more data technically. Do you agree or disagree here?
I agree. Wake me up when we're over 1800. Other than that, I'm not interested.
I agree. Or 1720. Either one. But right now,
yeah, you break 1720. Yeah, let's talk. Yes.
Either one. But yes, I certainly agree with that, Tyler. Because it's a nothing burger, we can move on fairly quickly to Bitcoin here. Crypto on the hill mark. Bitcoin testing the 200-day moving average. Individuals from leading crypto brokerages such as Coinbase on Capitol Hill today to discuss all things crypto in the future, all things crypto in understanding. Chucky, it's not one of those ones where it's like, I think it's one of those things where politicians bring people to interview to understand. I don't think there's anything else happening besides just a simple understanding, because crypto can be a little confusing, especially to some of our politicians at times. And so that's kind of what's happening in the crypto market. Technically here, after the gap down following the volatility over the weekend, the
Man,
market,
I wish Orrin Hatch was still a senator so he could be up there and ask questions. So how big is the coin?
do we get a physical coin here? Is
so
there-
these coins,
Can
what
I
are they
put
made
them
of?
into an
You know?
arcade shop? Can
If
I
you
do
don't know what I'm
that?
talking about, Orrin Hatch.
Oh man,
when
if
he was,
if
when
anybody
Facebook
from
was on-
Utah is laughing at this point with Orrin Hatch, no doubt, he got funny there at the end. But in terms of the actual technical analysis here in the crypto market with Bitcoin, the 200-day moving average is compelling. As 200-day moving averages typically are, a little bit compelling to traders and very compelling to the investor class. I called this gap down a little bit of a continuation of the volatility. That volatility is subsiding here a little bit as you fight up against that 200-day moving average. Tyler and Mark, I'll go to Mark first, then to Tyler. Do you see the 200-day moving average as compelling evidence as a potential buying opportunity, or are you waiting for something? Else? Let's go to Mark first.
I'm waiting for new exposure, existing exposure. They can take my Bitcoin proxies from my cold dead hands if Bitcoin goes to zero. I don't care. I cash flow existing. I don't do anything with existing. I've learned that in Bitcoin along the way. New levels of exposure though.
Let me clarify very quickly. So with existing positions in Bitcoin miners and Bitcoin proxies, you're basically saying it's for me, it's all about management. Up, down, it's all about management.
Lower cost basis.
New entries, adding to positions then.
I'm not going to get rattled out on ways down on new. I've learned that lesson. But I'm a believer, right? I'm a fundamental. I believe in Bitcoin.
Are you a holder now?
What?
You're a holder?
I actually own a little bit of
You're a holder? There you go.
I believe it. I believe,
like
much like the stock market, I believe that Bitcoin and Ethereum specifically, I'm still learning about other, but I think you're at much higher prices 10 years from now. That's all I need. Yeah, that's all I need.
Yeah.
All right. But for short-term entries, give me the same general pattern. So the last two Bitcoin sell-offs, one that was benign, one that was deeper, both of those had clear let's party signals. That last one was beautiful. That last one was absolutely beautiful. Trade sideways, 7-8 days, short-term consolidation, and then rip through resistance. I love that.
You're here, Mark? You're here? Or are we back here?
I think he's back there on the. He's talking the 200-day one.
I'm talking that pullback. You traded 8, right? There was worry. You come down to support. That support got tested a few times, and then you had the upward signal. That thing just, whoever was short Bitcoin, they're like, I'm done, right? So give me one of that pattern. Now the one before. Now we don't know how reversal patterns work. You can V-shape, right? If it happens, great. You can have this kind of short-term consolidation rip higher, or you can have the longer one, and that took a couple months. The one we had back this summer, where Bitcoin got rattled, came down, drifted lower, double bottomed at 30,000, and then you ripped higher on that like explosive move that had some.
I remember that one though. I remember that one very well, Chucky, because we were sitting here in the halftime report that day, and we're like, yeah, you gotta love 30,000 bouncing, but we were all talking about a potential breakdown against 29,000 at that point. I think a lot of traders missed out on that gap. I know let me put it like this. Almost every trader missed out on that gap up because the evidence technically wasn't there yet. But I also remember Tackle and being in the halftime report talking about that next flag that came back down and kissed off the 200-day moving average at that point. So it wasn't really the pop that I think got people interested in it. I think it was the flag that came down and retested and confirmed that 200-day moving average right there at the 1st of August. And so, and again, that 200-day moving average, it's just a compelling area on the chart to start to look for potential opportunities. Would you agree?
Yeah, no, I mean, I think a lot of traders are. And so, I mean, this thing is going to take probably a couple weeks to play itself out at a minimum. Can play out long. So it is just, once again, it is the whole, when you get these deeper dips, you give up the potential of this thing is just going to V-shape to the moon, and just wait for the pattern to develop for new levels of exposure.
Yeah, I don't think the pattern's there yet, and I don't think you got an edge one way or the other, quite frankly. But I do think you got to like the fact that you're sitting at the 200-day moving average, and I think you got to like the fact that you're seeing a little bit of volatility shift at the 200-day moving average as it's trying to play some defense. Stay with us in the halftime report as we break down all financial instruments on a daily basis. But right now, let's move into a little bit of stock talk after we navigated the market skyline. And I only got a couple stocks in the news today with earnings. I'm going to quickly go through. Toll Brothers first, please. Nice major home builder out there. Toll Brothers comes out, reports $3.02 versus the $2.48. Revenue comes in above the expectation at $3 billion versus $2.9. That resulted in a 19.5% revenue increase year over year. Guidance was a little bit mixed here. They lowered fourth quarter revenue guidance just a tad while maintaining the entire 2022 guidance. That's why you're seeing a little bit of a wider range on Toll Brothers than what we typically do see in earnings. This is typically a company that reports, moves on, but you're seeing a little bit of increasing volatility here, given the fact that you had a little bit of mixed data from a guidance perspective. I see this is a little bit overextended on Toll Brothers. A leader in the space, though. Tyler, what's your technical read here on Toll Brothers?
That's great. I pitched a home builder last week for Trademasters, so I love the space. It's a tough new entry with that size of candle being up, 5-6 days. So wait for a reset, but I love the trend.
I agree. Next one, Campbell Soup, CPB, please, comes out with a little bit of mixed report here. They come in with 89 cents versus 81, so a beat on EPS numbers. Revenue came in slightly light on the light side with 2.2 billion revenue versus 2.3. They also reaffirmed guidance. Campbell Soup post earnings. I wanted to bring it up because it kind of stood out technically to me at the low prices here. Looking at a little bit of reversal, tried to punch up, could not do it yet. I want to go to Coach Mark. Mark, you're a little bit of a bottom feeder in the market. You love the dogs of the Dow type mentality, stocks
Absolutely.
that are beaten up, especially stocks like Campbell Soup, that type of consumer staple type company. What's your technical read on Campbell's? Do you see a technical opportunity down here, or are you still thinking a little bit more time?
I think 100% cash flow opportunity. I love when a stock trades sideways for a month and we start to get upward mobility. I just love it. I love it. I love it. I mean, you've formed a natural bottom before the stock. Another thing that, in looking at things out there, I'm loving stocks that bounced off support before the market rallied this week. And you saw that with Campbell Soups. It
It held 40. Yeah.
It came down to that support level. And before the market rallied, right? It's like, nope, this is support. Market's still under pressure. I don't care. I love that. And you're seeing that in a lot of patterns out there. Stocks that bottomed before, on Friday, because Friday was huge sell-off day, right?
Yeah.
Did we get that's 3 Fridays in a row. I like to be really relaxed on Friday. Could we get like Friday not be a sell-off day for the first time in a month this week? That would be nice. But I love that when stocks, in the midst of all of the volatility we've had, said, nope, I'm going to stick support level before the market rally. I think that I love the psychology of that. And then you got a clear resistance level. So I love cash flow already. And then you get an upward mobility signal here. Yeah, I could see something here.
It stood out to me as I was going through my scanning this morning, going through my own daily routine and in such. I scan all the earnings reports, and I like to bring some that are obviously very popular trading companies. I'd like to bring the big blue chips to our community. I'd like to inform them on kind of those major earnings numbers, but a lot of times I'll also bring one or two that just stand out technically. And as I was going through my earnings scan today, Campbell stood out a little bit towards the low prices. And you know, Mark, if you're looking at Campbell's here over the last couple weeks, and that was your judge on everything happening in the marketplace, you wouldn't know anything about Omicron here in this chart. It's the same volatility before, the same volatility after. You're looking at a little bit of a breakout. I like the 42 handle here where Tyler's line is. A little bit of confirmation there would certainly help in terms of any price upward movement in price. But I like the double bottom analysis at $40 on Campbell's. Keep an eye on that as it navigates a $42 breakout post earnings. That is our journey through the market skyline here today. We now are moving into a segment we like to call the Tackle Shorts, where we bring one of the coaches on to analyze or to teach or to bring some degree of content to our community on a daily basis. Coach Tyler Craig brings us Jedi Options every single week. And Mark, I talk about these tackle shorts. I love them all so much. I truly love them all so much. Queen's Court on Tuesday, you know, Jedi Options on Wednesday, Fundamental Focus on Thursday, and then obviously Frank's Charts, where we geek out on all things charting on Friday. Love them all. Tyler Craig brings the heat every week with Jedi Options, though. Tyler, what do you got in store for us today with another segment or another edition of Jedi Options?
Yes, here's what's on my mind this week. I love the recovery in the market and wanted to build an option strategy around continued bullish price action. So we're going to build a bullish thesis on the S&P 500. We're going to build an options strategy using SPY options. And I'm going to teach you a little bit about a bull call spread. And I'm going to compare it to a long call option. So you're going to essentially learn the pros and cons of buying a long call versus buying a bull call. And we're going to break both of those strategies down. So let's start with SPY. And earlier in the halftime report, we kind of made the pitch for this, but let me explain to you how I would build this thesis. Mark did a good job of this earlier with crude oil. We want to stack the odds in our favor. We want as many variables in support of whatever our trade idea is. So if you take a look at the S&P 500 right now, from a technical perspective, you have a bullish breakout over 470, breakout over 470, call it 471 and change, right? You have December, we're in the middle of December, we have bullish seasonality. Historically, this is one of the more bullish months of the year. When they talk about the Santa Claus rally, some people, and Matt alluded to this earlier, some people would think, okay, December's bullish, Santa Claus comes in December, so September, or not September, but the Santa Claus rally is December bullishness. Well, true and not true. There actually is a very specific time frame that is the Santa Claus rally. That's the last 7 days. Actually, I think it's the last 5 days of the year and the first 2 days of the new year, right?
Yeah, it's right after Christmas. It's run right after Christmas.
Yep. So historically, that 7 days has been very, very bullish. And so you say, well, what do you think could derail this? Well, Omicron and the market throwing a tantrum coming into December kind of put expectations of year-end bullishness and festivity and cheer on ice. But yesterday, I feel like the market says, hey, game's back on. Bulls now have the benefit of the doubt. So I like how things are shaping up for a year-end run, and I think that supports anything bullish on the S&P here. So the question is, well, what do you want to do? And quite honestly, I think you could do just about anything, but I tend to do a lot of credit spreads and cash flow trades. Today, I wanted to mix it up a little bit and illustrate going more directional, whether by buying a call or buying a call spread. And deciding between the two is easier to do when you understand the dynamics, the characteristics, the trade-offs. So that's kind of what I want to get to here. I have to buy an option that exists and will last through the end of the year into the beginning of next year. So we're going to be using January options. I'm going to use January options so that I have exposure for the time frame that I'm analyzing. And markets at 468. So let's start with this. Let's say that I bought a January call option. And I'm just going to buy the 470 strike, which is essentially at the money, slightly out of the money, but I want to have a nice round number here. So if I bought the Jan 470 call, it would cost me let's call it $860. So not terribly expensive, but $860 for an option trade is kind of expensive. So choice one, I could buy a call option. I could go long the Jan. It said 370 or 470. Yes, 470 call at $8.60. I like to look at the risk graph to get a sense of what my risk is versus my reward, as well as my Greeks, right? So this is a long call option, limited risk, unlimited reward. The risk is what I pay, $862, and the reward is unlimited. Of course, I only have, 45 days of time here or so. So max loss, $860, max gain, unlimited. I would also look at the break-even price. If I were to hold this to expiration, that's the little hash mark, the stock would have to go from the current price all the way up to 478.60. 478.60. So I pay $8.60. I need the call to be $8.60 in the money at expiration to recoup my cost. Now, what is the delta? What is the delta of this option? This is a 47 delta option. I could even look at the theta, it's -10. So delta's 47, theta's -10. Now, that's my baseline. I could do this trade, fine with that, could put a stop loss. I'm not going to risk the whole 860. And, if Santa Claus comes and we get a nice little pop in the year end and this thing gets up towards 480, I got a decent amount of profit. 480, if it happens quickly, you're talking, $680, right? Now, what if I want to consider something a little less aggressive, something a little less expensive, something that's less risky, something that has a better probability of making money? That's what might take me towards the bull call spread. So this is choice two. I'm going to start the same way. Okay, I'm going to buy that Jan 470 call at $8.60. The difference is I'm going to sell something against that. That's what a spread is. You buy one option while selling another. That short option is going to reduce the overall trade cost and have a lot of other implications. So 480, I think, is a very realistic target. I think we could even go beyond that. But for now, I just want to do a simple $10 spread. I want to sell that 480 strike against the 470. And if you use the control key, you can basically just go find the option you want to sell, hold down control, click on the bid price, and it will add it to that existing long call, thus structuring a vertical spread for $4, and let's call it 475. So long the Jan 470, short the Jan 480. The net cost, let's forget that 860. The net cost here is 475. So the maximum loss is now $4.75 per share, or $475. So immediately I've cut my risk almost in half. You don't get something for nothing. What did I give up in exchange for cutting my max loss essentially in half? Well, you now have to sell the stock at 480. Taking a step back, when you buy a call option, you've got the right to buy stock at a set price. I had the right to buy stock at 470. By selling this call, I've got the obligation to sell it at 480. You buy something at 470 and you sell it at 480, $10 is essentially the maximum amount that you would make. So this spread value maxes at $10 per share times 100 is 1,000. So my max gain is 1,000 minus the trade cost, which is 475. So long story short, $525 is my max gain. And that really is the biggest drawback to doing the call spread, is now I've capped my upside. But you'll notice it's still substantial. I've capped it, but I could still more than double my money. After all, making $525 on 475 It's 100 and essentially 110% return. So I don't know that I'm going to be too bent out of shape if this thing gets up there. At the same time, consider the Greeks. My delta is not negative 10 anymore, or excuse me, my theta is not negative 10 anymore. It's negative 2.4. And so what have I done to my exposure to time decay? Well, it's minimized significantly. And so I can sit here and be a little more patient, a little less anxious as the market, or if the market takes time to go up. Maybe this breakout doesn't happen as fast as I wanted. When you're losing 10 bucks a day due to time decay, you get a little anxious. Long calls make me anxious. Bull call spreads easier to give some room and sit back and not be as I don't know, anchored on what's going on day to day. So less time decay. And then finally, the delta is also going to be dramatically less, 18 delta instead of 47. So no, I'm not going to make money as quickly as had I bought the long call. But that 18 delta will still add up significantly to a $525 gain by expiration if we can get above 480. So this is the type of trade that I prefer. This is my favorite strategy when I want to go directional. It's pretty rare for me to do a long call. It just is a little more aggressive than I want to go. I think it's a willing and fair, or let me say it this way. I think it is a fair trade-off to cap the gain at 100% plus return in exchange for cutting the risk in half. And by the way, if I used a stop loss, risk is even reduced even further. So say I put a stop below yesterday's low, for instance, 459. Now the risk reward really starts to look sexy, because 459, I'm losing 150 bucks. Not a whole lot of risk here for a decent amount of upside. So, all right, there you have it. Bull call spread versus long call on this SPY breakout.
Love it, Coach Tyler. Doing a bull call spread will mitigate some of your risk, make the strategy a little bit more conservative. And a lot of traders love selling something against something they're buying. The bull call spread certainly achieves that as well. Really appreciate another fantastic journey in Jedi Options here today. Let's go to final thoughts here on a Wednesday hump day in the marketplace. Let's go to Coach Mark. Final thoughts.
The CEO of South Africa's largest private healthcare network says the Omicron variant is so mild that it may signal the end of COVID-19. He talks about hospital admissions in South Africa where Omicron hit and saying we're not seeing anything. Hospitalizations are not up, even though cases are up dramatically. He says he thinks there's a silver lining here, highly contagious, but doesn't cause severe disease. I really hope that's how it plays out. That's been our take here for a little bit. I'm very interested in reopening plays. I'm going to look the technical patterns and the cash flow opportunities. But Omicron, you're going to see headlines still. It's going to take a lot for it to spook the market again.
I agree with that take, Chucky. Tyler, how about yourself? Final thoughts.
A couple of things. Small caps up almost 1% today, so love the follow through here. Tonight, first of all, this afternoon, got a Team Phoenix trading lab. So that'll be coming up here in about an hour and a half. Lots to discuss, so excited to meet with the team today. And then this evening, I'm going up against Mark in Trade Masters. I'm on a hot streak, Mark, so bring it.
Listen, your fantasy football team won this week, so listen.
Did I win?
That makes me sad.
Did I really win?
You really did.
Yes, Tyler, you won. Yes.
A much better trade.
Tyler, you didn't win the league. You just won last week. I just wanted.
No. All I heard was I won. Let's just
I know. Tyler still has not logged into his fantasy.
A boy can dream. Listen, I've been so laser focused on Trade Masters, I've neglected my team.
Well, no, listen, nobody's beat you in weeks. It's called a winning streak for a reason. Let's see if Coach Mark can do it here tonight. And while you guys debate the great picks you guys are going to bring on Trade Masters, we have a Delta round, Theta round, wild card, Mark. That's where the game is won here tonight. Tim and myself will be on Discord with a bunch of our pro members, and we'll be slightly judging your picks a little bit, but always in a positive light. You guys are going to do great here. We're going to hang out on Discord and watch Trade Masters and talk a little bit about those picks as you guys go through it. So if you want to hang out with us in the Trade Master Hangout, we will be in the Tackle Trading Discord channel tonight at 7 p.m. Eastern Standard Time as we watch Coach Tyler and Coach Mark discuss a couple of their potential Delta, Theta, and wild card rounds here tonight. Looking forward to that. Outside of that, Tackle Trading, you have a wonderful rest of your trading day, and we'll see you tonight in Trade Masters.